Sure.
Yeah.
And we went to his backyard, became fast friends. And
Nice.
then he just said, hey, you want to help me with these apartment deals? And it's like, it gave me the opportunity, which I think a lot of brokers at the end of the day want to do. They want to transfer from being strictly just commission based
Hmm.
to more of a principal capacity.
Yeah.
And that's what we did.
That's amazing because most people do the, single family homes, 4 flats, work their way up, maybe a 12-unit building, and then go to commercial at the tip of the iceberg. You started commercial and came to apartment buildings.
Yeah, I did. And
Yeah.
Doug, I got murdered on LinkedIn with people calling me and wanting to get involved that were, residential folks.
Yeah.
And I think your background, I'm not going to go in the weeds too deep on this.
Yeah.
When you get to a certain threshold on apartment units, you can get 3, 4, 500 houses.
Yeah.
That's not going to get you to the next level to qualify for financing to get an apartment project of any size. After about 30 to 50 units, when you go from bank financing to agency financing like Fannie Mae and stuff like that,
Uh-huh.
you need to be able to demonstrate two things: experience and about a $10 million net worth
Yeah.
for Fannie Mae to qualify you.
Hmm.
We had a partner come on that had 6 million in his account at the lender, our lender, and he wanted to buy an apartment complex. Now, 6 million free cash sitting there,
Not
and
not an not an intangible assets. This is liquid money he had.
liquid money. And he said, I want to put in an offer. I think it was like about an 80. It was like, I think, an 85 unit apartment complex in
Yeah.
Corpus Christi. And the lender said, nope. You have, I mean, he could have paid cash for it nearly, but he wanted to get a Fannie Mae loan and leverage it some.
Oh.
And they said, you can't demonstrate that you've had any experience in this.
Oh.
And what's great is that our lender, who we've been with for, that part of that trusted team member for over 20 years,
Yeah.
he referred us and we bought the project with him because we had the experience and everything. So it worked out
That
pretty good.
that is so telling, and I think that's really important for people to understand. As you graduate in the real estate world, yeah, the money's important, the credit's important, but I've talked to a bunch of people in commercials like, yeah, if the guy doesn't have experience in either development or that type of asset class, it doesn't matter because they can still burn through their money. They can still make mistakes.
Yeah, and it's a,
Yeah.
it's a very regimented debt
Yep.
structure that when you do it, you have to have a sinking fund for all these things that,
Yep.
when you go and get a house and sign a personal guarantee and then you buy a fourplex and stuff like that on LinkedIn, I actually had to put a video on there to dissuade what I call fix and flippers. I
Yeah.
hope I'm not hurting anyone's feelings out there.
Yeah.
That's a good way to make some money.
Yeah.
But just don't contact me because they want a level of control. They don't really meet the minimum capital that we need
Right.
coming in. And really, they're a little bit less of a passive investor that we're looking for. And they want a little
Right.
bit more
Yeah.
activity, and they just don't have the expertise in it.
Right. Right. So you guys work on, I'm guessing, larger apartment buildings. What's the average deal size?
It's unit size. We're
Yeah.
we're we're kneecapped a little bit because we work in secondary and tertiary markets across
Yep.
Texas.
Right.
There's some method behind the madness.
Hmm.
We only look at Class B properties,
Yeah.
high C to low Bs, and
Hmm.
so you're not going to just find an 800 unit Class B apartment project in a secondary market.
Yeah.
Most of our stuff runs from about 80 to maybe just shy of 200 units.
Okay. Right. So just for those people who are not well versed, class A is like amenities, brand new. It's got a pool, gym, all stuff. And D is like, crack houses. And then B and C are the two middle ones. That's like, hey, it's okay. It's just, it's not A. And then of course C is like, oh, it's just one notch above D. Is that about right? Explanation
That,
wise?
that's that's about right. And
Hmm.
A's the one thing you don't want in apartments is you don't want a lot of turnover.
Yeah.
That costs a lot of money.
Yeah.
And I mentioned in the book about break evens and stuff like that. That eats
Hmm.
into it. The On the A's, you have these upwardly mobile people, and the stock market goes up, or they get a big partner payout on
Hmm.
some business that they're in. They
Yeah.
just move on or
Right.
switch. They're very mobile, lots of
Uh-huh.
turnover cost. And then when you go to C and D, just forget about the bottom end.
That's right.
It's horrendous.
Yeah.
And C, there's something that, and this isn't just theoretical. I lived it, and it was I call it the C class slide, and it's just that these loans. It's funny the way that you're asking these questions. It's kind of boxing in together. The loans are very strict, as I mentioned, the Fannie Mae type loans. And most C properties start having some issues keeping up with deferred maintenance and things along
Yeah.
those lines. So they'll divert money from, the sinking fund for the roof or something along those lines. They need to make those payments. So they'll put money that they need for turnover cost into those funds.
Oh, yeah.
And I think you see where that's going.
Yeah.
Then instead of a full paint, you're getting touch-up paint. Instead of replacing the carpet, there's steam cleaning. And there's something, Doug, I never even heard of until I was involved. And it wasn't a small Class C property. It's 143 units back in 04, I believe. Dyeing the carpet. It's like you're kind of going in there and spray painting it. And it's like, my gosh. Well, what kind of tenants do you think you're going to get? You're going to get, a couple of truckloads of D tenants that say, hey, that C property's fancy. Let's move 12 people in a 2-bedroom apartment. And your tenant base just starts going down. And that's the slide that I talk about.
Yeah. I had a B minus C plus 20 unit building years ago. And I'll never forget this. It was maybe, I don't know, 30 plus years old. And one of the tenants was like so OCD. I was inspecting his place one day. It was like it was brand new, like it had just been built. And he had his stuff in his freezer alphabetically organized, right?
Oh my God.
Timeline. It was like he's a perfect tenant. He'd been there for 30 years, always paid his rent on time, never wanted. I'm like, hey man, if you want to help buy a house, I can help you out. I go, oh no, I like renting. Okay, fine. I looked at the carpet.
The C properties are hilarious what the folks will put up with. It's not the type of place that I want to deliver, but I remember looking at a property down by in kind of near the coast in Texas. And this guy said, yeah, you can look at my unit. He goes, hey, if y'all end up buying this, can you help me with my roof? I've got an issue and the landlord won't help me. And it's like, okay, Doug, I am not exaggerating. I'm 5'8", not a tall guy. This guy was maybe 6 feet tall. I walked into his kitchen and he had a hole probably close to 2 feet across with the sheetrock caved in. He had to bend over to open his refrigerator. He goes, y'all think that y'all could? And it's like, oh my gosh. I mean, he's putting up with it,
Yeah.
So
that's crazy. These people had the original carpet from like whatever it was, the 70s in this place. And I'm like, I had bought the building, a year prior. And I'm like, you've been there for 27 years and never replaced. No, because I think I can replace your carpet for you.
Exactly.
You can raise the rent. Yeah. $10. Is that okay? Yeah, sure. It was crazy. So, but you're working on bigger deals. And a lot of people don't have the ability to go and buy a 80 unit project. So I understand that you guys sometimes do either like syndications or you do think we're pooling some investor money or what?
Yeah. We reach out. We have a core base. We started as a friends and family operation, and this goes back. You can, I'm not going to promote my website right here. You go to my website; it's fairly static and talks about different deals. And you look at how we were structuring these back in 04, 05. One of an earlier deal that we did, we were trying to raise $600,000 for a 120 unit property. We weren't quite putting as heavy down as we do now. And what the game plan was to get 6 investors of about 100,000 apiece. And that's just to keep the pool smaller. And the friends and family thing that I think people end up appreciating if they end up being interested in what we're doing is that we still run it that way today. We keep the partner pool small. We keep the minimums high. We don't have a choice. We keep the minimums high, but then you say it's a passive investment, but it's not. You put 200 in one of my deals, and you get 3 years down the road, you're getting your monthly distributions. Hey, Doug, Mike. Yeah. Hey, how you doing? We're thinking about refinancing. What do you think?
Wow.
Well, let's pull some cash out tax free. That sounds great.
Man.
Or you say no.
Yeah.
And what we do is that we look at, if it's, 100% consensus one way or the other, we act on it. But we don't just force place the deal. We don't just say, oh yeah, hey, here's your money. And
Yeah.
believe it or not, some investors don't want all this tax-free. It's tax-free. It's money that comes to them till the property's sold. They don't want refinancing proceeds, but some do.
Yeah.
And so we're able to pull the people. Hey, we're thinking about selling. What do you think?
Yeah.
And then at that point, it's like, well, I want to do a 1031. Well, I don't.
Yeah.
And then we try to do something. And we had
Wow.
one deal a year ago, last month, where we sold out of 2 properties, and everybody came into what we consider a pretty good sized project.
Yeah.
We had 100% of the money equity raised, and we were putting 40% down on a $16 million property.
Wow.
And we had 100% of the proceeds coming in from our partners, all from profits, 1031.
Wow. And to explain to people who don't know what a 1031 exchange is.
It's basically, the easiest way to do it is when you go to sell a commercial piece of property, that you can do an election and trade into a similar type property. And then if you meet certain debt requirements and things along those lines, you roll it over. There's no taxes paid. They're actually deferred. It's not like it's tax-free. It's tax deferred. And then at some point, you're going to sell the property, and you might have 2 or 3 rollovers, and then you pay it all then. But it's accumulated tax-free during that period of time.
It's important if you're doing this for the long term, which I recommend. I'm sure you do too. You don't want to, you can fix and flip, like you said, but the long term is where the real wealth is created. And I remember, one of my, the 20-foot building, when it's 9 years later, it had more than doubled in value. And when I went to sell it, I talked to my accountant. I goes, "Oh, you got a pretty big tax bill when you have all that cash." So, let's do a 1031. So understand, folks, you could still sell and take the cash. You put it into an escrow account for, what's the time period? 45 days or less?
There's qualifications beforehand, and we actually use 1031 intermediaries. So we keep everything taken care of. You have 180 days from a certain period of time to identify properties, roll into it. And, maybe you can roll part of it in, and then you pay tax right then on a smaller portion.
Right. So you go to a third party, they hold the money, you put it in another property. So even though you sold it, you're actually trading the equity for a new one.
Correct. Exactly.
Yeah. Good. It's a good thing to do when you play this game, which I recommend people do. What about the downside? What's some of the reasons people don't invest in real estate, or specifically apartment buildings nowadays?
Well, the apartments are somewhat popular. It's just hard to get involved in it. The most popular out there investments are office and retail. And so, people want to get into those, and, you have this big trophy, building, or a small medical building or something like that. And, the office and the retail, we avoid those. We get sent, commercial brokers, we're on everyone's mailing list. We get that stuff, and it just goes to the junk pile. And so it's really, I think, part of it. And this is from just my own experience, Doug, when we had a group that I mentioned, it's the last story I think I told in the book, about 2 investors that were out of California that were kind of sort of interested in getting involved. One of the replies to me is, he goes, "Man, I'm so glad we found you guys." And it's like, it's to go out and find a sponsor that's doing these deals and taking in new partners. It seems to be a little bit hard to find. Which I thought was odd. I know your mouth's open, but geez,
nope.
I thought the same thing.
Spent plenty of time actively in it, and then later in life, passively looking for things. And we talked about this before, but like the Class A stuff is funny because, look at that gorgeous complex, with like a 1% cap rate. I don't know what
it's. That's one of the things that makes it real tough, and it's a challenge right now in the market. Is that sellers are still thinking, 3 or 4, maybe even 5 interest rate hikes ago, and
Yeah.
they're sitting back with their catcher's mitt on, saying, "Hey, bring out all these offers." They ain't coming, and they're thinking that they're going to get their property bid up.
Yeah.
Those days aren't happening either. And with us, we put pretty heavy down, 35 to 40% down,
Yeah. So you cash
uh,
flow.
and that keeps the investment a lot more stable. And I had a partner call in
Mhm.
one time that I was talking to, and I don't have any idea why he called me. Because the first words out of his mouth, he goes, it wasn't a whisper, but it was nearly a conspiratorial whisper. Said,
Yeah.
Listen, just deal with me. There's no way my wife wants to get into commercial real estate again." And I said, "Again, what happened?" And he said, "I'm in Phoenix,
Yeah.
and I think he had 3 or 4 pretty good sized properties. I think they were mostly retail centers."
Yeah.
And um, and I said, "What happened?" He goes, "Man, it was going along great until 2008."
Yeah.
And I said, "Let me ask you a question.
Lock me out.
If you own those properties today, this is about a year and a half ago,
Yeah.
how would things be different?" He goes, "Are you kidding me? I would be rich. It would be great." And I said, "So you had the deal, it seems like you had it right. What'd you
Yeah.
put down, like 30, 40% down?" He goes, "Are you kidding me? No, I put 15% down."
Yeah.
And I said, "You had the right idea, the wrong capital structure."
Right.
And I get that a lot. Our cash on cash, you give me $100, I give you $10 back a year. That's a 10%,
Yeah.
cash on cash return.
Right.
Ours are not that sexy, but we're playing the long run, like you said.
Right. Plus, you get
It's a
tax benefits as well, not just the cash on cash. There's other
sure,
benefits to
sure,
it, right? Yeah.
yeah,
Yeah. That's very, it's very, very telling. The real estate. I mean, I know we talk about a little bit about the flippers, and that's fine. You can make some cash there, but wealth comes from time, and
sure.
that's the biggest thing there. So if someone's gonna, if they got the means to do this, and it's okay to plug your website, Mike, you're allowed to put it on here. We're all about promotion here. So before we get to how to contact you and talk about your book a little bit, what are some key things if a person doesn't have 100 grand? Let's say hey, I'm going to start on my own. What would you recommend to a person, like 3 key things they should do to get started investing in apartment
Sure.
buildings or real estate in general?
Um, the just I guess May of 2022.
Mhm.
Um, we have the $600,000 I told you we raised
Yep.
back in
Mhm.
'05. That didn't come from 6 partners. It came from 2 partners,
Oh, okay.
and they've been in our last 16 deals.
Wow.
Okay.
Right.
And they just sold that one in '05 at the beginning of 2022.
Mhm.
So they held it. We don't normally hold things that
Yeah,
long.
it's more time. Yeah.
And so when we come together, we get the package together that we send out to the folks. It's a
Mhm.
PDF. It's real easy to read. People just want to know, you know, IRRs,
Right.
reverse, leveraged IRR. They don't cash on cash, holding period. What do you think it's going to sell for? And,
Yep.
and so we just put the
Yeah.
cookies on the bottom shelf for them, and that's how it's promoted.
Yeah.
Uh, and so when they see those, if we're raising $4 million, we might have a couple of our partners that have taken down three of the 4 million. And if that's
Mhm.
the case, we're going to relax the
Yeah.
minimums on the
Sure.
front side.
Okay.
Now, we can't go super low, but let's say that we're looking for a minimum of 150 to $200,000.
Mhm.
Okay. Um, if someone has 85 or 90,000, I'll probably try to work them in, bring them in
Mhm.
after a pretty extensive interview to make sure it's the
Yeah.
right thing for them. Of
Right.
course, the whole know your customer deal.
Yeah.
But if you're not going to do that, something that doesn't make me a dime is if you're really wanting to get involved and exposed to commercial real estate,
Mhm.
just go buy a publicly traded REIT. You
And
know,
explain to people what the REIT is too. I know, but they need to know.
it's a real estate investment trust.
Mhm.
They typically specialize in a specific um, segment,
Yeah.
apartments, retail only. Weingarten is a company out of Houston. They only do shopping centers.
Yeah.
And then there's office ones. They usually just are in one category.
Yeah.
Okay. And by law, they have to pay out, I think it's like 90% of their income
Okay.
as dividends.
Yeah.
And so those are very liquid. It's like buying Apple stock. You don't like
Right.
what they
Hmm.
said on the announcement today, you sell it and you're out.
Yep.
Uh, that's one way. If you're close to our minimum, yeah, I'll work with you on the
Yeah.
first deal.
Yeah.
And then one thing I'll tell you to avoid is crowdfunding.
Yeah.
And they
Talk
have
about
it
that.
for real estate. They have it for commercial real estate.
Hmm.
And I'm not going to name any names or anything like that,
That's okay.
company names, that is.
Yeah.
If you go and look at a couple of commercial real estate, uh, you know, crowdfunding websites,
Hmm.
wow, I mean, there's tons and wide variants of different product types and
Yeah.
everything like that. What a lot of people don't know about crowdfunding is how it works, and they're attracted by the very low minimums. Uh,
Yeah.
you can get in for $1,000,
Right.
and
Hmm.
on the REIT, you can buy $1,000, and if you don't like it, you sell it. You
Yeah.
get into a crowdfunding deal,
Yeah. Yes.
you're in it till the principal
Yeah.
once, and he doesn't call, and check to see if you want to buy or
Nope.
sell. You're in,
Yeah.
and you go down the road,
Yeah.
and it's something that uh, it acts as a clearinghouse or a middleman. You have all these sponsors or investors,
Hmm.
like my partner and I,
Yeah.
come to the table and say, "Hey, we want you to go find us, $10 million." And then they go out and they submit it, and they'll vet us a little bit, they'll vet the deal a little bit, but they're looking at, unanchored retail centers in Boise. They're looking at, a 3-story building that has 1 story with smoke damage in
Yeah.
Miami. I mean, and then these different people are buying it. And just recently, there was a pretty well-known case. I don't mind mentioning the sponsor name,
Yeah.
Nightingale. They raised $50 million on a
Hmm.
site. Okay,
Hmm.
and that is a enormous, in my opinion, an enormous
Yeah.
deal. That's the down payment cash. That might be, 150, $180 million total deal. Uh,
Yeah.
and they got $50 million from 700 investors, filed bankruptcy. Not the property didn't work, but
The
they
holding.
got the check, they deposited the check, 50 million, 700 investors, and went bankrupt.
So the company went bankrupt. Do they have any equitable interest in the property? These investors or not? They bought into the
They they
company.
they
That's the
they
real.
sent them. They never purchased. Let me back up
Yeah.
to make sure.
Yeah.
I don't know if they ever closed the
Okay.
deal or not. I just know that right after getting the money, it folded, and they're just trying to get liquidated damages back right now. Which will be unfortunately pennies on the dollar. And
Yeah.
another one. You think it's a double-edged sword, Doug. You get you get the folks that say, "Man, this is great. I can put $1,000 or five
Sure.
thousand dollars down and get in this deal." There was another deal that closed about 2 years ago. I think it was an office building. $14 million was raised between 400 investors,
Okay.
partners, and that's a very small, amount per investor.
Sure.
The
Yeah.
issue is that, okay, so you have a question about your property. What do you do? Well, here's a dashboard that you can go on and just look on your computer.
Mm-hmm.
Here is an email that will promise to get back with you in 7 to 10 days. Or here's a bunch of frequently asked questions.
Right.
But, we get a deal in friends and family format. You got
Yeah.
my email, you got my cell phone, you got my
Yep.
operational partners email and cell phone. You got a question, you call us.
Yeah. I do think that's very rare nowadays, Mike. We talked about that before. It's like all the, you know, dashboard, internet, customer service, 7 to 10 days. Pick up the phone and call Mike. Say, hey, what's going on? Oh, I'll tell you. And you can. That's real old school, right?
It's something that I think it's very inefficient.
Yep.
But when someone goes on our partner list,
Yeah.
uh, I tell them, give me very specific criteria that you're looking for,
Hmm.
because I'm not going to bug you. And that's been a huge part of my success back from 88. When
Right.
someone's told me, call me in 6 months, I call them in 6 months.
Yep.
Most brokers just call nonstop, hoping to get the business.
Yeah.
And when I send them something, or they'll email me and say, you haven't heard from you in a while.
Yeah.
Well, you said your minimum cash on cash was 10% and that you wanted something that was 100% apartments, not mixed use.
Right.
And I think one of our partners saw an announcement, prospective partners, I should say. We bought a 3-building property in Shreveport. It's a historical type property,
Nice.
and it has some street level retail
Okay.
and some second floor office. So it wasn't pure
Yeah.
apartment.
Mixed use. Yeah.
So I didn't send it to him. It met his investment criteria, but he said
Right.
100% apartments.
Yeah.
And so I don't say that like saying, so, shame on him. It's
Yeah.
just like I listen to what people say, and it's
Yeah.
not going to be like, okay, so this is what you're looking for. Okay, here's a 5-story office building. You want in? I said just apartments. Okay, well, here's some raw land. You want that? Just anything. People respect that when you just get back with them with what you want.
I love that. I love that. So the book that you've come out with as a bestseller is called Fearless Apartment Investing. Yes.
Yes.
And it helps anybody, especially if they have, if they have something going on, of course, they can invest with you. But even if they don't, they can learn a lot about this world of apartment investing. And the Amazon link on your website is below here. People can click on that. So they can. Any other parting words of wisdom before we close out today?
No, I think the book, as far as who it was written for, is prospective investors.
Right.
And if you're just getting started, if you've been in a few deals, and I try to be pretty even-handed with some of the things.
Yeah.
And there's a part that I see a lot of investors come to me and they're already in.
Yeah.
If you invest, and I'm looking you in the camera, and I'm telling you this, if you invest in triple net, single tenant, freestanding buildings, okay?
Yeah.
You splurge the buck and get my book. I mean, it's free on here, but I'm just saying do that, because there's going to be things that I will guarantee you do not know that will make your hair curl.
Yeah, I totally agree with that. I read about it before I met you. I'm like, why would I have put all my eggs with one other tenant who may or may not be in business 5 years from now on a triple net? It's like, it's scary to me. I like
it's great, but it's going to close the circle as we come to a close, Doug.
Yeah.
So why do commercial real estate brokers hate it? Those are proposed as coupon clipping investments. Basically, you buy it and you just get the check sent to you or auto deposit it to your bank account.
Yeah.
But it's not always like that. And I represented a company statewide for a number of years, and I saw what goes on behind closed doors.
Yeah.
And this wasn't a small, it's Fortune 500, it's a big company. And the way that they handled some of their properties they'd be investors like me and you.
Yeah. Wow.
It's if you own it or thinking about it, don't listen to what your broker's saying that these are just, coupon clipping and kickback and put your feet on the desk. It's not. Yeah. It can be, but you need to be aware of something.
Well, I've as you know, I've done houses, apartment buildings, and one office building, and I have multiple tenants in there. So I know enough to be dangerous, but I really loved looking at your book, and I think people should, no matter what you're doing, it's a great one. It's a fast read. Highly recommend it. The link is below here. Fearless Apartment Investing by Mike Amir. Mike, thanks for being on the show today. I appreciate it.
Hey, no problem.
You bet. All right.
Take
and
care.
That wraps up another episode of the Author Your Brand Show. You're going to want to take notes. If you didn't, they're right below there. Thank you very much and have a great day.